Hey there, welcome to the video. I'm Scott Welsh. We get together every week to talk about trading systems, and this one is a painful video for me to make. It's painful because it makes me look like an idiot. Let's get right to it. Number one, we're going to talk about did I just have an epiphany? Did I just learn something maybe I should have learned a long time ago? Talk about that. We're going to talk about how good systems are better than great ones. And that doesn't make sense, but it does. And I'm going to give you the details, the inputs on a good system, tell you and show you what I mean. First of all, I am going to talk numbers, so please understand these are hypothetical numbers, not taken from a real trading account. Do not risk anything you cannot afford to make. This is for education and entertainment, and it's a lot of both. All right, here's my epiphany. Again, quite embarrassing. As far as trading, I got interested in trading in 2004 and it immediately turned into a very big obsession. I've been studying automated trading robots since 2012. I've spent on one robot that I still trade. I've spent over 2,000 hours on it. I think actually it's over 2,500 hours on just this one robot. This doesn't count all the other robots that I've studied and continue to study. Okay, it's a lot of hours, happily, but a lot of hours. And after all this, I think I might be an idiot. I'm really worried about this. All right, now, what's even better is I've been an idiot before in my other life. If you've listened to any videos, you know that I was and am a tennis coach. Spent a lot of years on the court and still giving a lesson or two today, as a matter of fact. But I learned an extremely valuable lesson on the tennis court a while ago. When I first started in tennis, I thought I was going to change the world, and the way I was going to change the world is I was going to study strokes, and I was going to teach the best strokes of any coach in the world. So I studied and studied and studied, because if I taught perfect strokes, my students would beat everyone. That makes good sense, right? And then after a few years, even though my students were doing pretty well, I mean, it's not like they were failing, I realized something important. That there is no one way to hit a tennis ball. There is no perfect stroke. In fact, you can make people improve way faster if you took what they had and then just try to make it as good as possible. Maybe, oh, that's the wrong grip. That's a quote, imperfect grip. Well, instead of spending 6 months trying to change that grip, maybe they get it in the end, right? But you've still wasted 6 months going for perfection when we could have had 6 months of doing extremely well with something that's imperfect. Can you see where we're leading? What I learned is you just need strokes that are good enough. It can't have a major glaring weakness. It just needs to be good enough to work under pressure. You can have imperfections. Imperfections actually are kind of good in a way, because it means that you solve a specific sort of problem. This grip doesn't work. I'll learn how to hit it down the line with this one. And it leads to introspection that you may not get if you're studying quote unquote perfection. Take imperfect strokes, organized and learned as well as possible, making the best of what we got, and then send them out there. Learn what you've got and organize it. It doesn't have to be perfect. But yet, until very recently, I've not done this in trading. The truth is, I've worked on one system at a time, right? Now, I've looked at a lot of systems, but again, I've spent over almost 3,000 hours on one system alone. You can see where I've been going with all this. Study. If I study hard enough, I'll make a system that can't break. I'll make a system that's better than everyone else's, that will withstand all bunch of markets and so forth. And I've worked and worked and worked and worked and worked at this. Okay. Oh, it goes to a bad period when then I look at it. But I've worked on it long enough where honestly I don't need to change it that much. It has survived. But look at all the time I've spent. And I'm only really spending most of my money on this one thing. Spending meaning trading it. Most of my trade size is all on one thing. So I have to live and die by this one thing. And it's worked at times. It's worked great. I've made a lot of money on it when it goes right. I've beaten the market when it's been blah. But I'm wondering, and this is part of the epiphany, have I been costing myself money by working on this and working on this and working on this, trying to make it perfect, when I could have been for years now training something that's just pretty good, pairing it with a bunch of other pretty good stuff, and just doing amazingly well. Okay? The big question I've been thinking about lately is, what if it doesn't have to be perfect? What if this quest for perfection was misguided? And what if a bunch of good is better, right? I mean, that's a paradox, right? How can good be better than great? By definition, good is not better than great. But here's where it specifically leads us, right? Number one, if we go for great, we might over-optimize. We might curve fit. If we make a better back test, right, we want to see a back test that's awesome. Therefore, our future will be awesome. And if we keep working on it to make those valleys in our equity curve better, we might go over the line. I can try not to. I know better, but I want a better future. There's just such a temptation. And like it says on the screen, hard work, pushing to perfection can kill us if you just go a little too far and over-optimize for a market that may not exist in the future, or at least will exist in a much lesser way. And I've heard this. It's not the first time I've heard it, but it's now sinking in. Great traders, traders who manage funds or have had great results, say a good system is actually more robust than a great system. Example, long-term capital management, made 40% per year back in the 90s. It was a fund made by super smart people, made 40% per year, barely lost, and then it blew up. It was a perfect system. That's why everybody wanted it for 3 years, and then it broke. Whereas trend followers, people who have been around decades, plural, have down months, down periods, down years. But they say it's the down years that are essential, because if you try to whittle away and optimize away the down years, you won't catch the next big up years. Do you see? If you change for the down years, you may miss the huge up trade that's coming. See what I'm saying? By leaving it alone and just being, yeah, it loses sometimes, you are now perfectly in step with the chance to make it big. Magic Formula, one of my favorite trading books of all time, the little book that still beats the market, Joel Greenblatt. He says that his magic formula, he has a fund now that trades this and does extraordinarily well, at least according to the results I've seen lately. He says the key to the strategy is losing years. Number one is, just like we said, you don't keep optimizing and searching. But number two is, if you're perfect, everybody will run to it. And if everybody runs to it, you lose your edge and it goes away. The losing years keep people uninterested or disinterested. It's one of those two. It keeps people away if you lose, and therefore the strategy can work. The best way to trade, to be consistent and make money long term, is just to trade good, okay charts. It keeps you from over-optimizing, and it keeps all the looky-loos away. Fascinating, isn't it? This is just sinking into me. So let's do such an example, all right? And then we'll get out of here. This is gold, right? If you're a futures trader, I get emails from people who trade futures. Well, here's gold. Gold is fun because you get massive moves in gold, right? I don't trade it live, but I am looking at it, okay? This is just a good system. It loses. It has losing years, right? It does. It has drawdown, right? And here it is, right? It's a breakout system on a daily chart. You can see the continuous contract on a daily chart, gold continuous. It breaks out, oh, and then it fails. It breaks out, oh, then it fails. Oh, it broke out short and it fails. Oh, there's a breakout short right back there, right? This is 2018, 2019, right? This is actually 2019, excuse me. Okay, this is recent times. Lose, 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 lose. Oh, nice winner. And it actually re-entered. It's in a nice winner at the moment, as we sit here in June 2019. Right? It's not great. I'm not showing you a perfect chart. These are recent trades, and it loses. Here are the details, right? Now, I took this from a trading book I read recently. Very good book, right? But you can get this from anywhere. This is not, you can take it from the turtles. A breakout above the higher low of the last 48 bars. There's my line This is the high of the last 48. This is the low of the last 48. When it gets above the last 48, boom, you're in, boom, you're in, boom, you're in, boom, you're in. Okay? Got it? That's complicated. Turtles did it, what, at 55? Same thing. Take profit, 3,500. I know trend followers hate that, but I just I wanted to keep this simple. 3,500 bucks, that's it. When it reaches 3,500, hooray! 3,500 there, and then re-entered and got in again. Okay? Makes sense? Stop loss was 1,000. Where'd I get that? That's what the book said. I didn't do anything, right? This was actually given to me too. I don't even think I optimized it. I don't even remember, right? Because I spent so little time on it, okay? Stop loss was 1,000. Again, I just stole that, didn't know optimizing. It's just one contract, okay? Here's how it did, right? It's not great. Look, it drawdown 16 grand, but it made $109,000 from 2002 to 2019, right? Unbelievable results. Profit factor is great. Win percentage is 32%. That's not perfect, right? But it made a ton of money. If you traded this on, if you were risking, traded on a $16,000 account, you would have done amazing. If you traded on, say, a $30,000 account, you would have had to survive maybe a 50% drawdown, maybe to make all this money, right? It's just a good old boring system, unoptimized, right? And it made a nice amount of money. But here's the thing. Like I said, by itself, it's fine, right? Go ahead and trade it, steal it, use it. But if you pair it with 8 other charts with the same parameters or similar parameters, I mean, like 99% the same, I tracked a portfolio of 9 different pairs, this included, right? Out of curiosity. And guess what? From 2005 to 2019, the portfolio averaged 180% per year with a drawdown of between 40 and 50%. Is that crazy? I mean, that's just crazy. It was just a bunch, 9 good charts, none of them perfect, none of them great, but organized in a way where the drawdown was reasonable if you can take that much drawdown, and just made a boatload of money, right? Again, not all of them are exactly the same, but close, right? So take that knowledge and extrapolate, check it out for yourself, right? And if you want more on it and more information on that, get involved in my weekly newsletter. I mean, why aren't you? Sign up, go to scottwelchstrategies.com and sign up. I talk about it this week. I'll be talking about it Friday and Sunday more, right? Give you some more details. But this is the end of my boring, not boring. It's never boring. I meant embarrassing, embarrassing admission. Good is more robust than great, as it turns out. And it might be a whole lot more money. And maybe I've spent a lot of hours when I could have been making money doing something else. Well, I'm on the case now, so we'll be talking more in the future about big changes that I make. But maybe you can, if you're starting a trading journey, maybe you can learn from my mishaps and do better right away. All right, you can always go to Scott Welch Strategies and sign up for that free weekly newsletter, or look at memberships or anything else. All right, email me with questions, and that's all for this week. We'll be back next week with more embarrassments. Bye for now.